Good evening. This is the market update for buy, sell, short for Wednesday, May 30th. Dow down 160 points. Have a guess what the reason is. Do I really need to tell you? If the market's down over 100 points, lady, there's only one reason. Europe. And yet again, Europe raised its ugly head and the markets went splat and all the money went stampeding into U.S. Treasuries with rates hitting a 60-year low today. Absolutely amazing. Europe or the euro broke to a 23-month low. And the reason for this big sell-off and rush into the safety of Treasuries was, drumroll, Spain. There we go. Big whoop-de-doo. I don't mean to talk lightly about it, but if you recall on the Monday video, I had actually mentioned that Spanish interest rates had spiked on Monday, but the market didn't care yesterday because yesterday was a paint the market up today. And today they needed to pull out the Europe excuse to paint us back down. And we find ourselves stuck in the same back and forth nonsense that we've been in really for the last couple of years, but kind of reminiscent of what we saw last August through November timeframe. Economic data this week may help, although expectations are pretty low. GDP report and jobs report, and the numbers are expected to come in lower than expected. So it'll be interesting to see what kind of push we get out of that. Funny thing is, Greece, the issue there sort of got pushed off to the sidelines because we got some positive news that Greeks are coming around to supporting the pro-bailout fund. So the second that Greece sort of gets resolved, and I use resolved really lightly, all of a sudden they go after Spain. And if Spain comes out tomorrow and manages to fix things and we get a little bit of a rally, you know what they'll do next? They'll go after Italy. That's just the way they're gaming the markets right now. And we're just stuck in this really annoying pinball game. And actually what's even more annoying is over the last couple of days, we saw some signs of a decent market, I thought. We saw some nice chart bounce plays. It was safe to dip your toe back in the water, and then Europe comes out and bites your leg off. We had that nice big golden cross on the Dow 15-minute chart. We got our 150-point bounce to a T. So what do we do today? Gave it all back. If you look at the 15-minute chart, though, really doesn't look as bad as it seems. We're caught in this little trading range here. We had that sell-off. We look at the Dow daily chart. We are consolidating here. There are some warning flags out there, but, you know, we're still playing things small, half positions, still high cash stance, and playing the momentum that's out there. And, you know, biotech stocks have been very, very nice over the last few days. And we've had some very nice setups. What sucks about today's sell-off was it was just enough to scare traders to the sidelines again. Granted, if we see another snapback rally tomorrow, that could quickly be reversed. But, you know, really decimation across the board. Russell down 14 points. SMH, SPY, I mean, all pretty much the same. What we're going to look at, though, is the VIX chart. VIX is approaching the 200-day moving average, and we're going to keep a really close eye on it. You recall a couple of weeks ago, I did a little bit of a discussion on the VIX monthly chart and how, as you can see, the exact same time over the last 3 years, we've had Europe raise its ugly head, and then that has corresponded with a really big spike in the VIX and a big market sell-off. And VIX is looking exactly like it did this time last year. And you recall we had a pretty steep summer sell-off. I've been sort of optimistic that we would not see that play out. Or if we did, it would come after we saw a decent-sized bounce in the market. I mean, this 300-point rally that we've had from the lows a week ago, sad is what I would call it. We didn't even touch the 20-day exponential on the bounce back. Very rare, even given the size of the sell-off we had there. So, you know, we have to continue to be cautious. But there is momentum out there. We can't just crawl under a rock and not try and trade. We just have to trade a lot smarter and take our gains when they come. And we've had some very nice gains over the last couple of days. CYCC play into ASCO this week. Poster presenter, 20% move in a day. You can't argue with that. We did exit 3/4 of that position. I know some of you sold all at 65 plus cents. It did dip back into the close, but that's exactly what we want to do. Our target on this was a move to the 200-day moving average and then possibly continuation up to the 70s. Market sold off today, which means you book your gains. Now, our other play going into ASCO this week is OXGN. They are also a poster presenter at ASCO this week. Has been unable to break through that 95-cent level. $1 would be my next ad spot here. We're looking at a potential positive MACD cross, and as I mentioned, our target remains a move up to the 200-day moving average. I mean, I'd like a 20% move on this one, just like we saw in CYCC. And as you can see, this stock pretty much once a month gets a really big spike. So we are overdue, and we've got a reason for it this week. DARA, Cancer Bio, we jumped into yesterday. Big volume, but volume disappeared today. We got painted down on the close, and, you know, traders seem unwilling to hold quality stocks, really. I mean, they have no problem chasing shit like this up 75% on news that if you actually read the news, you go, did I actually fall for that stupidity? I mean, they chased this contract. I was seeing posts out there in Twitterville about, oh my goodness, they got a $20 billion contract. You know, put your common sense hat on. Slap yourself on the face. No one gets $20 billion contracts. But that's the kind of shit that moves in this market. SVNT, we had a nice little pop on this one on Friday. Looked really good over the last couple of days. Actually looked pretty decent today, and then they pulled the rug out, and down it went all the way back down to support. I don't know what to say other than, you know, I mean, the stock is deeply oversold, and when it goes, it will go big. But, you know, we got to play these small, and we got to play them with tight stops. If it breaks 75 cents, we back off, and we wait for a breakthrough 90 cents to re-add. Simple as that. That's just how we play this market. Capstone, CPST. We actually picked some of this up today. The reason being the big run in fuel cell, FCEL, from the pop scan. Nice big pop over the last couple of days. These two stocks tend to run in tandem. RSI is breaking 50. Positive MACD cross tomorrow. We've got stochastics about to break the 50 level. We've got this really big symmetrical triangle breakout here. Typically, the height of the triangle added to the break gives you a target. So if we just go from this recent spike, we're looking at, you know, a 23-cent spike. That would take us up to that 125, 130 level with stops, you know, 97 to $1 is your stops on this one. Nice charts are working, but you cannot play them big in this market. So our gains are going to be smaller, but when we're wrong, so will our losses, especially our tight stops. And that is just how we have to play this market right now. Another nice chart setup is VG Vonage. This had a nice break. Then the market started accelerating to the downside, and it sort of crimped the move. But you can see this nice bottoming action, increasing volume. 50-day moving average at 198 would be the target. Indicators look great. RSI, stochastics in a nice little uptrend. So there are decent charts out there. We just have to play them small, play them smart, keep our tight stop, and book small gains when they come. Simple as that. So what are we looking at for tomorrow? You know, it all depends on what the spin is out of Europe. Simple as that. What has typically been the case over the last couple of years is when they ambush the market on some sort of European news, the next day we get some sort of spin, some sort of denial, some sort of rumor. Given that it was a run on Spanish and Italian debt, we'll probably get some news tomorrow about some expansion talk on ECB funding, or the ECB is buying Spanish bonds, or something like that. It'll be some lame excuse that will snap us back up and reset the clock. But, you know, if we become accustomed to being stuck in a trading range like we were last summer, then we can trade that. It's just this initial, you know, uppity down stuff that is scaring a lot of traders. I mean, I'm going to go off on a tangent right now. I'm going to get a little political, but, I've said over the last 2 years since those idiots took control of Congress and have been fighting deficit spending, even though we've been in the worst recession since the Great Depression and we should be spending money hand over fist. The point I'm trying to make is no matter how much printing the Fed is doing right now, the dollar is going up. U.S. borrowing costs are going down. This is when we should be unloading debt on everyone under the sun to help our economy. I mean, our interest rates are at 60-year lows. They're almost paying the U.S. government to give us money. And here we have these idiots in Congress chopping spending, cutting jobs, refusing to spend money to get us out of this funk where, if we were spending more money, we could give Europe the finger and go, screw you. The economy is booming here. Unfortunately, we can't. Big reason, election year, so there's no way in hell those dumbasses in Congress are going to do that. Hopefully they'll get all washed out this November, and maybe we can really see some... why even go into it? I mean, I know half of you guys are going to go, yeah, I agree, and the other half are going to go, our deficit is too big. It's just the name of politics, but, with interest rates at 60-year lows, we should be printing as much shit as we can, and using that money to better the economy. Simple as that. But anyway, let's see what happens on the bounce back. I'm still hopeful on this market. If we do take out this week or low we had a week ago, we really could be looking at a test of the 12K level. Let's check out the 1-year chart. I mean, if we break through that, we really could see some acceleration to the downside. So we do have to keep that in mind. And if we do get a break below the 200-day moving average at 12,200, then we can go into an extremely cautious stance. But until then, we're at the mercy of Europe. C'est la vie, as they say. And, we just got to trade what we have. That's it for the video. Any questions, shoot me an email, feedback@buysellshort.com or .net. And I will see you guys in the chat room tomorrow. Good night.